So, Bill, what are you expecting from this CPI report? We've been getting, economic reports, things like manufacturing PMI that are already showing that prices are increasing and input costs are going up. We're also hearing from, big companies like a Delta, a Kohl's, a Dick's, that they're kind of seeing or expecting a consumer slowdown. What are you expecting from this inflation report? And I do want to keep in mind that the numbers, whether you look at core or headlines, still well above the 2% target for the Fed.
And that's exactly the problem, Frank. The fact is, last 5 out of the 6 CPI reports have been coming in awfully hot. And the Fed desire to see a downward trend in inflation, a steady downward trend, is gone out the window. And now the real concern is, what is the Fed going to be doing? And right now, because of the mix in data that are coming in, as you say, potential slowdown in consumer spending, they're going to be sitting on their hands for a while until they see a clear trend reestablished again, whether inflation trends up or trends down. And right now, just 1 or 2 numbers just won't make the difference. They're going to have to see a clear downward trend to resume easing and a clear upward trend in order to really consider tightening.
Well, you know what? Let's go to that idea right there, the downward trends and the upward trends. One downward trend we kind of sort of appear to be seeing is in jobs. We saw some weakness in this jobs report. We also had some reports that small business payrolls declined for the first time in 14 months. So we're seeing some trends there. I want to ask you, what does this all mean for the Fed? If the CPI number comes in hot, as we also are experiencing economic weakness and the potential for stagflation, how does a Fed respond to that?
Well, right now, I think the fact that we are at historic lows in unemployment, the Fed is pretty confident that the labor market is pretty secure. But as you say, the emerging data, the survey data are showing that firms are really hesitant to hire right now. They don't want to be, they're putting delaying their expansion plans. And because of that, we also lead to a drop in consumer confidence because the Conference Board survey of consumer confidence is very highly correlated to the ease of finding jobs. And right now, finding a job is not as easy as it was before. But nevertheless, the Fed is going to be looking at whether or not we have downward pressure on GDP that causes them to want to continue their easing again. But right now, the inflation story is really the main driver. And right now, the trend on inflation is not going down.
You know, Bill, I want to hit a data point that kind of shows the intersection when it comes to the economy and the stock market. It's always important to point out they're not the same thing. You gave us one of these data points. About 10% of Americans, they own about 70% of stock and pension assets. Also, about 10% of Americans are doing about half the spending. What does that tell you about the strength of this economy going forward and the position that we're in with tariffs, increasing costs potentially, and also increasing uncertainty when it comes to businesses, whether it's making investments or doing hiring?
The key vulnerability that I've been pointing out on your show for almost the last 6 months now is that growing split among consumers. The people who are able to consume are the ones who have assets because income growth for the U.S. economy has been slower than consumption. So people are really overspending their income. And the only people who can really do that are people who can cash in their capital gains. And so more and more of the spending is done by fewer and fewer rich people. And that vulnerability, I think, is going to get even worse now as the job market starts to slow down. But one source of uncertainty that we are underplaying is that the emphasis on tariffs, and maybe Trump is overplaying his strong hand in using tariffs, is that the possibility of achieving the Trump objectives of reducing the size of government, reducing taxes, reducing regulation, and incentivizing more foreign investment, that goal may be in jeopardy because, or at least put back, and that's the source of uncertainty that's causing, I think, the overall market to sort of pull back and say, gee, the Trump trade may be very much delayed and possibly not met at all. And so the uncertainty really isn't about tariffs, but keep meeting those goals.
All right, Bill, we do have to go, so please, really quick. I don't think you actually answered my first question. Hot CPI, what does that mean for the markets? Does that automatically mean a sell-off in your mind?
I think the markets realize that the Fed is going to be on hold. And right now, the only thing that the concern is, will companies start to cut their profit margins or pass on prices, higher costs to consumers?